Investments in securities are subject to market risks. Read all related documents carefully before investing. Hello, folks. Today is 17th of May, and we are starting this weekend investing daily bites on a day where Nifty and uh, even Bank Nifty have come off a bit. So what we were expecting or kind of perplexed yesterday in terms of where we are, you can see that while yesterday's move was more in line with the staying in this channel, but today the move really broke down out of this channel, and second part of the day it did come back about approximately 90 points, but the rhythm that or the momentum that the Nifty had has been broken for now. So like we were mentioning, it does seem like market is looking for some rest, and why not, because we've come up almost 1,500 points, and the profit taking is taking over. And but there are more reasons for this if one is looking for some reasons. uh, the Nifty heat map, as you can see, is awash with red. uh, Banking not so badly hit, but IT stocks almost 1.5% down across the board. Reliance further down 0.6%. FMCG also hanging in there. Tata Motors down 1%. Steel and cement also down. JSW Steel, Tata Steel, Grasim, Hindalco, commodities are down. Consumption stocks, Asian Paints, uh, etc. also down. Power stocks, NTPC, Power Grid also down. Pharma stocks also down. So nowhere to hide really, except minor gains in ITC, IndusInd Bank, Maruti, Bharti Airtel. State Bank was flat. Adani Enterprise mildly. So pretty much everything you can see for today's date, everything is down. Real estate, I would imagine, is doing some profit booking, still very, very strong on monthly, 1 week, 1 month, 3 month, and 12-month basis. Other sectors losing between 0.3% to 1%. Nifty also closing down 0.6%. Autos just managing to eke out a 0.1% gain along with FMCG. So if we look at, let's go back to that chart. So if we look at very short term, the short term trend has moved down. If we, let's say, look at Nifty on the hourly charts, on a daily chart, I would think Nifty trend is still up, and on weekly, definitely we are in a very strong upward position. Mid caps, which had made a very iffy kind of candle yesterday, today came down but recovered most of the ground. So it almost closed at the same closing as yesterday. A candle with a long leg also, uh, in most circumstances, denotes that the market is not willing to go down. So it is trying to find a new equilibrium. Yesterday, the market was not willing to stay on the higher side. Today, the market was not willing to stay here, so it has closed very near yesterday's close. So mid caps are not showing any signs of any major weakness. Small caps also not showing any weakness. Small caps actually moving up and having a higher close today. So this is very, very heartening that the fall is not across the board. Neither is the sentiment so bad that usually small caps will get hit the most when the sentiment is bad. But small caps going up at a new high close today also means that the trend seems to be up, but the heavyweights are taking a correction because of some external reason, and we'll come to that reason very, very soon, because FIIs are not invested so much in small caps. FIIs are invested in Nifty stocks, in the top couple of hundred stocks. Nifty Bank also, if one were to see on a weekly basis, for instance, this week it made a you know a it touched the previous high, and it is just simmering there. So if we look at the prior instance, where in September 22 we went and challenged the previous high, but then there was a sell off for a couple of weeks, and then we went to an all-time high. So it may so happen that we may be resting here for a week or two, and then we take out that new high, because at all times high there is some resistance for people who have been stuck at that high or near about there, will cause resistance to come here. You can check out any stock chart for that matter. It is, if the crossing towards an all time high is very smooth with lot of volume, then it will just be a runaway. But if it is struggling at previous all time high, then it may take some time for that move to happen. US dollar, INR, rupee also, you can see in the last few sessions, I would say 7-8 days, 9 sessions, has gradually crept up from 81.6 to 82.35, and we are now headed towards this channel high at 83 also. So combining this with the dollar index now. Now this has been the US dollar index, which is also called DXY. This is the dollar index is measured versus some of the major non-dollar currencies, and this shows the strength of the dollar versus other currencies. So what we observe here is from June 21 till about September, or maybe starting of end of September, we had a huge run in the dollar index, and then from September 22 this dollar index started to fall till about first quarter into 2023, first couple of months, and then there was a bounce and then it fell again. So it was trying to breach this support level at 101, but in the last few sessions it has started to go up again. So it has also breached this trend line. It has created a base on this 101 level. So rising of dollar means that other currencies are falling against the dollar. The dollar is strengthening. Whenever the dollar is strengthening, that is not very good news for all other asset classes. Somehow, uh, it's a very, very direct correlation and indication that when dollar is strengthening, funds are moving towards dollar-based assets, or towards the funds are moving out of other assets into dollar-denominated assets, and that's why other assets start to go down as dollar becomes stronger. So this is a close-up of the last chart. We are just showing you this on a zoom basis. So this is what is happening, and there is now concern that the dollar may, again rise at least to 105, 106 levels, and that movement has started there. I was long expecting that this 101 level will break down, and once it breaks down, I was expecting that it will go down to nearly 90 levels in the next 6 months or a year. But so far, that has not happened, and the dollar index has started to rise. Now, let's look at how the dollar index impacts other asset classes. So, first example is, let's say, gold. Now, there's a very direct inverse correlation that dollar index has. So, very large moves, if you see, for instance, this period of 2005 to 2011, you are seeing that the dollar, then this top chart is the dollar index, the bottom chart is the gold index. It has consistently fallen from this level down to here, about 10-15% down. In the same time period, gold has gone up and peaked somewhere near the same bottom. Of course, it is not correlated 100% to say that this gold will be inversely proportional to USD on a one-to-one basis, but larger trends are very indicative. So dollar was doing down here, gold was going up here. Then the US dollar started to rise from 2011 till about 2013, and you can see very clearly that the dollar, that the gold started to fall from bottom somewhere in 2016, 2017, and then for the next 3-4 years, net the dollar was falling here, here, and once this dollar started to rise from 2021 onwards, you can see that gold, the bull just gave up and was going down. So now, the gold and dollar index correlation is very, very clear. It's very inversely correlation. Now let's look at the dollar and EMA, emerging markets ETF. Uh, so here also you can see very clearly that when the dollar index was rising here in this period of 14 to 15, emerging market ETF was falling here. Again, dollar index falling here in 2017 to 18, emerging markets are rising here. Falling here, dollar index falling here, emerging markets rising here, dollar index going up dramatically, emerging markets coming down dramatically. So it's very very it's a stark correlation, inverse correlation right in your eyes, and that's how the way the world is moving. So dollar going up is not good for everything else. And while the correlation is not so stark on a Nifty basis, I should have created this on a dollar Nifty. Nevertheless, you can see that the Nifty has had extremely good times when we had major dollar fall. So 2002 to 2008, you can see the dollar is falling here dramatically, and that is where we had the most, I would say, the golden period of Nifty was when the dollar was collapsing here, and we had a great run up of almost 300-400% here. Again, very recently, you saw dollar falling here in 20 post COVID 2020, and you saw, the rise in Nifty here. In the last, when the dollar was rising here, you can see that, although a bit delayed, but Nifty went stagnant in a rising dollar scenario, and now the dollar is beginning to rise again. So the fear is that we may just stagnate here if that dollar strength does come back. So if the dollar stagnates, you can see Nifty can do its thing and go gradually up. But whenever dollar is falling, that is where the real strength in a Nifty up moves comes around. So if this 101 level, as I showed you earlier, is going to fall, I am very sure Nifty will go to an all-time high and even much higher than where it is. But till that time, when the dollar is still hanging around or is rising, that is where the circumspect situation is there for all emerging assets. So the insight basically is that USD and Nifty and Asian stocks, a strong inverse correlation. Weakening dollar attracts more investment fund flows, thus creating more demand for the rupee, resulting in the markets doing well. Uh, so we want a weak dollar, which eventually will happen. I think the way the de-dollarization is happening, the way US debt is going up, the way it is becoming unsustainable debt in their scenario, a weakening dollar is a sort of a given that will happen in the next whatever 5 years, 10 years, decade. So we will do very well in that period. Also, USD and gold has an inverse correlation. So whenever dollar weakens, gold is surging. So if dollar is going to weaken in the next 10 years, I think gold will do extremely well. So all the situations where dollar is weakening is very very beneficial. Thank you so much for watching this, and let us know if you have any feedback for us, or you can leave the feedback for us on our blog or on the Twitter page, and we'll be happy to respond to it. Thank you so much. Bye.